एक मार्केट को ऊपर जाना है और एक आपको ऊपर जाना है, दो चीज फिक्स है लाइफ में, बाकी कुछ फिक्स है कि नहीं पता नहीं. So 92 was a time of replacement theory. Harshad Mehta scam which bought out. 2000 was a dot-com bubble. 2008 was something called subprime. Then there was another housing crisis. Then 2020 something stuck, which was called COVID. So every time you learn a lesson, unfortunately, you learn from it on the behavioral aspect, but the reason for the fall is something different. We were very fancied about something called VCR, where you used to watch Bollywood movies. But when the time came to buy VCR, my dad said, Devang, it costs some 11,000-12,000 rupees. I'll give you this money, put into an IPO of a good company that is coming. We always been sort of back office and middle office to the world. Can we become factory to the world partially? My answer is yes.
Hello and welcome to this very special edition of an interview that I've bought for you on our Free Press Journal. I'm Sheryll and today with me I have a seasoned wealth manager as well as someone who's been in this industry, in the financial services industry for the last 23 years. He's known for educating investors, showing them the right path when it comes to investment strategies, as well as guiding a lot of them and hand-holding a lot of them into this world of investment. I'm talking about Mr. Devang Mehta, who's sitting with me right here. Thank you so much, Mr. Mehta. And I must say it's a privilege for me to have this conversation with you because you've been in this industry for the last 23 years. And for most of my time in the industry, I have actually watched someone like you educate investors, guiding them in the right path when it comes to investment because, equity markets, not everyone was very well versed with it, and everyone was very scared of it also, isn't it?
Very true. Thank you, Sheryll. It's honestly my pleasure to be on your show, and I hope that this podcast and this show probably would find a lot of viewers, and it would probably make me and you both bring out snippets of wisdom, which helps everyone in their investing journeys.
Absolutely, absolutely. Tell me, Mr. Mehta, how has your journey been through all these years? I'm sure when I actually talk to a lot of guests, the first question I ask them is about market cycles. With you, I will not ask about market cycles. I will talk about investor cycle and how the investor sentiment cycle has been over the last 23 years.
I'll mention a little bit about my journey. So my investing journey actually started when I was 14 years old.
Wow.
Right. And then I'm lucky to have my father and grandfather who thought of had this investing DNA or genes which got transmitted to me. At 14 years, of course, at 14 years, I was not allowed to put money, but I was taught to fill IPO forms. During those times, I'm talking about, I think, the start of 90s, where it was more of filling up the form for IPO. Oh. So they didn't have the time, so they entrusted me with that duty that you fill up the IPO form. So I started to understand a little bit of what is business, right? Dhanda kya hota hai? Exactly. What is business? And coming from a Gujarati household, no casteism, but that just comes to us very naturally. So I started to do that IPO forms. At 18, I was promised that I would be bought something called VCR. I don't know whether you know what is a VCR, video cassette recorder, right? And then came the times of DVDs and of course now the OTTs as well. But we were very fancied about something called VCR, where you used to watch Bollywood movies. So I was said that you come out after you have 12th standard with flying colors and you will be bought a VCR. So I did that. But when the time came to buy VCR, my dad said, Devang, it costs some 11,000-12,000 rupees. I'll give you this money, put into an IPO of a good company that is coming. That company's name, with all disclaimers in place, is called Pidilite Industries.
Wow.
Because I'm talking about 1993. Now, Pidilite Industries, the question was, what does the company do? If I said 18, I was smart. No, I was not. And I'll not take that credit. My dad said it manufactures Fevicol. It's a good company. It's coming up with an IPO. Please apply to that. God was kind, dad's wisdom. I applied. I got allotment. Today it has returned some 30% CAGR over the last 30 years or so, 32 years or so. The house where I stay in, a couple of rooms are dedicated to Fevicol. Those proceeds have come out of that. So that's the investing DNA. When I did my master's from the Jamnal Bajaj Institute of Management Studies, a lot of people came and said that Devang, the crude price is rising, you have to sell Pidilite. But I understood something which Warren Buffett talks about: durable competitive advantage or sustainable competitive advantage. These are businesses with moat, pricing power. If the input cost rises, they have the wherewithal to pass the cost to the consumer. Right? It's not a commodity business, it's more a brand business or a pricing power business. So I understood this very early in my career, and then probably I was able to implement it. So as I said, the passion goes a long back. That has stayed. It's not a usual 9-to-5 job. I tell all my team members, all the trainees, all the interns who join us, that it is a job where probably it's a 24/7 job, Of course, you have to have your hobbies as well, but this should also be a part of the passion that you want to pick up good businesses and hold it through the time cycle. So that's a little bit of my past. Of course, worked with great companies, started off my career with Angel Broking, which is now Angel One, worked with Anand Rathi for 7 years, worked with BNP Paribas Wealth for 3 years, which gave me a global exposure of traveling to Singapore, Hong Kong, Dubai. Worked with Centrum Wealth for 6 years, and now the last 3 years I've been working with Spark Capital Private Wealth. So as you rightly said, the 23, 24 years journey, seen different cycles, as you talked about the cycles. I think market honestly gives you sort of a chance to overcome your behavioral aspects, right? By behavioral,
Right.
I mean, you probably, there are only two emotions in market everybody talks about, greed and fear.
Greed and fear.
Right? So it's very simple to say that be greedy when others are fearful, be fearful when others are greedy. But there is a fine balance of both of this. Every market cycle will teach you something which probably you want to utilize in the next fall or in the next cycle. But the reason for the fall will be something different.
Exactly.
Unfortunately. Right? So 92 was a time of replacement theory, Harshad Mehta scam which bought out. 2000 was a dot-com bubble.
Yeah.
2008 was something called subprime. Have you heard subprime
Yes.
before 2008?
No.
I had never heard.
No.
Right? Subprime
Yeah.
crisis. Then there was another housing crisis. Then 2020 something stuck, which was called COVID or coronavirus. I think I had never heard in my life about COVID.
Yes.
Right? So every time you learn a lesson, unfortunately, you learn from it on the behavioral aspect, but the reason for the fall is something different. That's the beauty of cycles.
Yes, exactly. But then can you apply those same theories or what you've learned in those cycles actually in the next market cycle? Like, for example, what exactly happened during the COVID crisis? Right now, we are not faced with a similar sort of a situation, right? You are seeing global tensions, geopolitical tensions, and it's just rising, doesn't seem to even subside at this point in time. So how can you use those behavioral patterns actually in a next market cycle? Does that hold, or you think it changes?
Yes, behavior is the only thing. I always say that while your fundamental aspects, while your sentiment, while your liquidity works, but I always say that you don't lose when markets panic. You lose when you panic.
Yes, I've heard that. That's your
so
old mantra, isn't it?
That's my old mantra. I use it every single time.
Yeah.
Why? Because it's always, if you see, a ship does not sink in water, but a ship sinks when water comes into it, right? So you have to have this can't go to your mind. The volatility will be in the market, but if it affects your heart and your mind, you are going to react to it. And to me, every stimulus or every stimuli should not have a response. Right? The stimulus too, you're not a response to stimulus.
Yes.
So you don't need to respond and react to everything. That is the mantra. I'll come to that. The question is that does every market cycle teach you a lesson, right? Which always probably you can carry on towards the different cycle. Yes, it does. I'll tell you, if you learn to control your behavior, if you learn to say that Rome was never built in a day, it will never get deconstructed in a day. Why I say that? Because a lot of times you feel that everything is going to just go. Jaan hai to jahan hai. COVID में ऐसा बोला गया था, right? यहाँ पे at this point, a lot of people feel this war is going to just kill the markets. It is not going to give you returns right now. Korea is doing well. India is not doing well. But honestly, you have seen that only two things work. एक market को ऊपर जाना है और एक आपको ऊपर जाना है. Right? दो चीज फिक्स है लाइफ में, बाकी कुछ फिक्स है कि नहीं पता नहीं. But this is something which is very important because if you realize that markets over a longer term period compound with earnings. Market is a slave of earnings. So finally, what I say also is very typically focus on controllable. Right? What is controllable? In your control, what would Mr. President Trump talk today? Is it in my control? Not at all. Is Iran going to attack Israel or Israel is going to attack Iran today? I don't know. Honestly, I get a lot of such questions, but I don't know. Globally, would things change overnight? I don't know. What is in my control? My control is on my client portfolios. Whether this portfolios I need to navigate through the volatility. I need to respond again and again to news. I think honestly, news is more of sensation. Right? Should we apply the sensitivity analysis to news? I honestly no. What will affect more? Yes, Indian macros, Indian micros, earnings, cash flows. What is the promoter talking about? I don't want to buy a company where I'm going to sell it tomorrow, right? I don't want to buy a company which is just raat gayi baat gayi. It's not that type of a relationship with the company. You have to hold through that company, through the thick and thin of the company. Probably your quarterly numbers are also important, but not as important. Because I always say you can't be QSQT, quarter से quarter तक. You have to be YSYT, year से year तक, या DSDT, decade से decade तक. आप अगर वो करोगे तो I think there is no chance that your behavior impacts, because a lot of times this short-term behavior makes you sell a company which is going to be a multi-bagger or a multi-compounder over a period. And your son will ask you sometimes, your daughter will ask you that ये क्यों बेच दिया था जब आपको पता था ये अच्छा कंपनी आपने बाय किया था, but why did you sell in the peak of a pessimistic market? So my sense that yes, if you can control this behavior, don't be an optimist, don't be a pessimist, be a realist. Right? And India is going to do well. Honestly, that's the message that I probably felt that I should give through it. I'm not saying India growth story and all such stuff, but India probably is at the point where there is a great opportunity for wealth creation and wealth multiplication for all of us.
Something very interesting that has happened over the last 4 to 5 years, right? And the reason why I asked you about investor cycle, the reason why I asked you about behavior, is because in the last 4 to 5 years, or rather last 6 years, because it's been 6 years since we were hit by COVID, you've seen a drastic change in the type of investors that have entered the market, right? Because a lot of them saw the markets crash, and then they saw markets rise and hit all-time high in no time. And what that has done is gotten a lot of people into the market who really have not seen those market cycles. So their way of behavior, or their understanding of the market is much limited compared to a lot of them, or like someone like you who's spent about in excess of 20 years in the market. So when such investors come in who panic, who will react because they haven't seen such a cycle. So how do you control that?
Superb. So bang on. I think a very, very good question. I just a little bit of blast from the past or a flashback. Is that I think around 12 to 15 years back, I used to travel a lot through the length and breadth of the country. So I used to do investor events. I would have traveled without exaggeration 265 cities, right from Karur, Tirunelveli, Madurai, Erode, down south to Patiala, Panipat, Bathinda, Jammu up north. Okay, I done this because at that point we were mandated to create investor awareness along with SEBI, along with MFI, along with the exchanges. So I used to do that and it was very close to my heart, and it still is. At that point, 15 years back, the question used to be, while there were 800,000 people listening to me at a stretch and probably clapping and giving a standing ovation once you present something. The bigger part was they used to come to you and say that, sir, thoda side pe aaiye. Tell me one idea which changes my life. Right? Tell me one idea. Ye sab chhodiye. Just give me one stock which changes my life. Give me a multi-bagger idea. And my jokingly I used to say that don't ask for a multi-bagger, because probably if I give you one stock, it can make you a bagger also. Right? 5 साल में नहीं मिला आपको, पता नहीं वो कंपनी में क्या हुआ. So let's talk about compounding. Let's talk about investment ideas. Let's talk about where to invest. Should I do SIPs? Should I invest in direct stocks? But give me a portfolio of ideas. Right? That was always the thought that I had. Honestly, people have matured a lot. The question now I get when I travel to even tier 2, tier 3 cities is that can I continue my SIPs? Markets are volatile, but I'm still investing. Should I increase my SIPs? Yes, there is a question sometimes, should I stop my SIPs also? But then if you explain them, they're able to probably recollect and I can say realign themselves. Believe me, the money that has come over the last 5-6 years are your money, my money, our clients, ultra HNIs, family offices, mutual funds, domestic investors, drivers, maids. Right? Again, this is not a community, but they have become really smart. They know that FDs में पैसा नहीं बनेगा ज़्यादा, right? Your inflation will eat out your money. So my sense that this money is going to be very sticky. Yes, as you rightly said, the question is that whether they would behave well in a cycle which is probably going to take a downturn for the next 2 or 3 years. They can. It will be partial. It can happen. But honestly, these are people who I feel want to create wealth in the longer term. They are not here to make money in the shorter term. See, at COVID, a new word was coined in called Robin Hood investors.
Yes.
Right, if you recall.
Yes.
तो Robin Hood का क्या था? वो trading करके निकल जाते थे. यहाँ पे I think this money seems to be more sticky. They are coming through mutual funds. They are coming through good instruments of investments. I don't think there'll be. Of course, if a market does not do well for the next 3 to 5 years, it can happen. But part of the market is always doing well. See, at this point also there is a big disconnect. You are in a bull market if you are in good small cap and mid cap businesses.
Right.
You are in a bear market if you are in the typical large caps. So ideally, I think these people are here to stay. The behavior change that I have seen over the last 10, 15 years, there was one question which always used to disturb me and I didn't have an answer, to be very honest. Devang, if FPIs, foreign portfolio investors, sell their holdings tomorrow, what would happen to Indian markets? And honestly, last 4-5 years, except for 2024, show me when were FPIs here. They've generally been doing outflows, right?
Yes.
Last year they sold some 1.7 lakh crore.
Yes.
This year in the first 5 or 6 months they've sold something like 2.4, 2.5 lakh crore, right?
2.5.
So this is the figure that when I stand with this figure, you would also be aware that right now in the India scheme of things, in India's free float market cap of 460, 470 lakh crore, today FII holding is less than domestic, right?
Yes.
FII now hold roughly around 16%, domestic 18%, 10% is roughly people coming to direct equities, your 9% is government of India, and your 50%, 51% is India promoters. So this is the in numbers, right? That we are now, I'm not in any way saying that we are dominating them, but we need them for a market to be in momentum. We need them for market to go up over a longer term. We need capital from foreign, but domestic investors are now probably in a position where they are shielding themselves as well. So that's a welcome change, which I feel.
Yeah, brilliant. And actually, that's a change that we've been wanting to see for a while, because we were so dependent. Right. And like you said, everyone would only ask this question: what happens if FPIs are going to sell? What's going to happen to the markets? But we are holding pretty strong. And at this point in time, what would you actually say that is happening in the markets? Because you're seeing a lot of rhetoric when it comes to AI. One point in time, it was an AI frenzy. Now you have concerns that the AI spending is a problem. So you're seeing a selling in these companies. Right. What is exactly happening? And where is India in this entire AI race? Because all you hear is we've missed the bus.
I think this is over here. Anything in excess is always going to probably just break down.
Right.
Right. So you might have seen thematic rallies in India. As I said, if somebody goes back to 1992, it was more a replacement theory. Right? If you want to replace a plant of a cement company, what is the cost? Whether it was a right analysis or wrong, I leave it to people's judgment. But that was one theme. 2000 was more a .com. Right? Any company which didn't used to do well used to put .com after it. Right? They might have a table space at Kalbadevi in Mumbai, right? And they used to say that we are an IT company, right? So that was one theme. 2008, it was an infrastructure theme. A lot of this, believe me, infrastructure / real estate companies had no right to list. Right? They got listed. Again, welcome to the market when they get listed. But the most important part, they forgot that in taking debt also there is a risk, right? So when you work with high debt around, there was always a risk. So it was a theme called infrastructure. So everybody gets carried away by the theme. I want to buy only infra stocks. I want to buy only power stocks. During 2000, people wanted to buy only IT, and IT. And that's why the sutra of diversification has to work. You can't be putting all your eggs in one basket. Coming back to the problem right now, the sweet problem of India of not having AI. India is actually a real trade, right? India is artificial intelligence, and if I put it, real intelligence. So India is more a real intelligence trade, where we are typical old world charm of consumption strength, right? Consumption has always been India's strength. Now India runs right now on 3 C's. This is what I reiterate sometimes. The first C belongs to consumption. Right? In our school days also, Sheryll, you could recall, we were said that we are a consuming nation. Yes. Right? Our median age is 28. Right? Women also now are at the helm of the workforce everywhere. Yes. Right? Earning members per family has increased. Our demographics support us. We are entrepreneurs. We are jugadu. Yeah. Right? We can do jugad. Right? So Indians across in Silicon Valley, Indian doctors across the continent have been very successful. So my sense, coming to the question, that India runs on 3 wheels. Consumption, discretionary consumption. Discretionary is upper end consumption. Now, what is upper end consumption? People, what was luxury earlier is now becoming necessity. Right? Right? You are sitting in an AC room. Right? Yeah. We would have the best of gadgets. We would have the best of watches. Right? That is where India is probably an aspiring Indian is moving towards. Look at the people who travel in flights vis-a-vis 10 years back. Right. Look at the people who travel in Uber, Ola. Right? The people who buy cars. You might be aware that the largest selling car in India is now an SUV. right? Rather than a hatchback.
Yes.
For all of us, the first car was a hatchback,
Yes.
and followed by a sedan and then an SUV. So this is where consumption comes to the fore. The second C stands for capex. Now, capital expenditure. Now, what is capital expenditure? Capital expenditure is government as well as private. Now, capex is capital goods, infrastructure, roadways, ports, railways, airways, waterways. All this infrastructure, the last 14, 15 years, and I'll not be political here, you've seen a lot of infrastructure getting created. You travel across India, we still crib that infra theek nahi hai India mein. There is an opportunity in adversity, right?
Yes.
You are seeing so many in Mumbai itself. Look at the freeway, look at the coastal road. I traveled right now from BKC to Nariman Point to do this interview with podcast with you, right? It took me 22 minutes, believe me, from the coastal road. Beautiful. You watch the ceiling. You just forget your market worries, right? So that's something that I think that has got created. So infrastructure. The third C belongs to credit growth. And something which is very important is credit growth along with financialization. Right? We talked about people investing in India now through mutual funds, through equities, through PMSs, through AIFs, through exchanges, through intermediaries. This is one sector itself where probably people would understand that while you invest in India, there are also companies which are intermediaries which you earn big time while investing. So as I said, we are very selfish. We want to buy these 3 Cs. Right? While the Korean market and the Taiwanese market, which we are talking about, the US markets, have a lot of AI related companies. You would be knowing that some of these companies, 2 or 3 companies together would have surpassed India's market cap.
Yes.
Right? These are companies which are huge. Of course, India probably has the typical run-of-the-mill IT, where we were innovators earlier. We were not been able to go through the AI cycle right now. But honestly, India is trying to sort of get into it. We have always been sort of back office and middle office to the world.
Yes.
Can we become factory to the world? Partially. My answer is yes. Manufacturing, engineering, all this were India's strengths, which sort of were not capitalized earlier.
Yeah.
I think the times are such that somebody who wants to now shift from AI, from those type of trades, and I'm seeing this time coming sooner than later, not knowing the timelines. But as soon as those trade, I'm not saying it's a bubble, but if people start selling, if the FII starts selling in Taiwan or Korea or US, probably yes, India might also sort of not do well for some time because there's a global selling, but we will outperform the pack. Because we have this type of companies which probably are not the torch bearers in the other parts of the world.
Yes.
So probably if somebody has a site set up and per capita consumption of everything, right from your hospital bed to your car, everything is low. So I feel there is a great opportunity if someone thinks about India from a 3 to 5 year lens. 10-year lens people don't allow me nowadays because disruption is becoming extremely high.
Exactly.
But 3 to 5 years, if I don't even hold a crystal ball, if you look at only earnings, if you look at cash flows, you look at India INC, I think we are in for good times. So my sense, we missed out on that, of course, but India is different to those markets.
And brilliantly you've put in actually in this entire answer that why India is a real intelligence or the real trade versus the AI trade that we are all actually looking at. And you said whatever is done in excesses, it will fizzle off somewhere or the other. And very interestingly, in those 3 Cs, I've realized that there is one sector that doesn't make a feature in any of these 3 Cs. That's the IT sector.
Yeah.
If I've gone back and I've seen your interviews, I've in fact interacted with you a couple of times, and I know that you've never liked that sector. Are you feeling vindicated?
Honestly, I feel good that you mentioned this because very rarely you get brownie points for not picking up a sector.
Yeah, which everyone has been very
respect. So see, as I said, what we look at while we buy the business, that's very important, and I'll try to mix that question with this one, is that how we shortlist businesses, right? Why IT didn't feature in my buying list over the last 3-5 years, if I can say. Of course, we used to buy traditional IT and we made good money, but last 3-5 years, I would have missed out on 2 years earlier, but I'm happy to miss out that rather than seeing such a huge fall. Why we didn't pick? Because we look at 3 things when we buy a company or a theme. Opportunity size. The opportunity size, I know everybody talks about it, but it's very difficult to spot out an opportunity size for an industry. Now, when you look at opportunity size, what do I mean by that? The opportunity for a sector, for a theme, has to at least be 3, 4, 5, 8, 10x, if not more. That is what I look at. IT growing at single digit type of a constant currency growth, the revenue growth being in the first 1, 2, 3, 4, 5%. Valuation wise, they might be cheap, right? But India wants premium valuation. India is ready to pay premium valuations for growth. So why not buy industries which are going to grow 3, 4, 5, 8, 10x? I don't have the visibility that IT would probably. IT can at the most compound at the rate of say 8, 10%, 12% FD plus type of returns, which is good. I'm not saying it's bad. But somebody who wants equity type of returns has to at least sort of, if I don't use the word outperform, should at least have 14-15% type of a return band, which the index also gives you, right?
Yes.
You don't do anything, you just buy the index,
Yes.
and India's top 50 entrepreneurs start working for you, right? आपने इंडेक्स खरीद लिया और आपने सबको काम पे लगा दिया, तो ये 50 कंपनीज तो आपके लिए कुछ भी करेगी अगर आपने ETF में इन्वेस्ट किया. But then you also know that there are other companies which are not part of your benchmark indices, not of your true blue indices. These are companies which are probably mid and small in size, right? These are companies below 1 lakh crore of market cap. India today is roughly 470-480 lakh crore of market cap. There are only 6 companies which are about 10 lakh crore. From 5 to 10 lakh crore, there are around 9 companies. From 1 to 5 lakh crore, there are around 82 companies. Below 1 lakh crore, there are 4,000 companies on BSE and 1,900 companies on the NSE, right? Which are listed. Some of them might be common. But this is a pool where if you try and find out companies with huge opportunity size in a particular theme. For example, what are the themes to go to? Semiconductor allied, right? There are data centers. Yes. There is going to be HVDC, power automation, engineering, cryogenic equipment, niche pharma, hospitals. All these sectors are below 1 lakh crore. A lot of these sectors.
Exactly. I was just going to say because that's where
these are companies. So why not look at those where opportunity size is huge? Even there is a perfect oligopoly, duopoly, monopoly in certain businesses over there. These businesses have very high ROE. Some of them have very high ROE, ROC. They have a roadmap towards EBITDA, PAT, revenue growth. Right? These companies generate cash flows. Somebody very early in my life taught me that profit and loss sometimes is vanity. Balance sheet is some bit of sanity, but cash flow is a reality. Right? So when you look at cash flows of these companies, business क्या करता है? शाम को गल्ला भर जाता है कि नहीं, right? The business is showing you something. While you have such companies, why look at companies? Probably yes, IT companies also have a lot of cash. They need to probably buy other companies or pay dividends or do a buyback. They are flush with cash. As I said, I still feel that somebody who is a very traditional investor might have small proportion over there. But to people like us who want to identify concentrated portfolios, a little bit of focused approach, we want to buy companies which are out of the index, and over a period, the next 5 years, there is a probability that the company comes into the benchmark index.
Right.
That's the thought process that we carry.
You know what you've done, Mr. Mehta. You basically, I'm not able to ask you even pointed questions. I'll tell you why. Because you summed up very beautifully why mid caps and small caps are much preferred basket right now rather than the large caps. Because the fact that you have these niche companies in these sectors. And people should look at these sectors because the quality of our mid cap and small caps has actually become so much better than the large caps, right? Over the past few years, it was a frenzy. People used to only invest in broader markets just to make quick returns, right? Because the moves used to be very sharp over there. Now people want to invest in the broader markets because the quality of the companies are improved, and I think that's where the behavior, that's where the investor cycle and the way how the maturity has come into the markets.
Very true. I think I'll just extend that point. As you rightly said, the quality of the companies have improved, the corporate governance, the ethical practices, the ethical standards have improved a lot. As I said, still there will be stray cases. But once you are in this segment, the one disclaimer that I tell everyone is, in mid and small, don't paint it with the same brush. Be market cap agnostic that way. Probably there are certain large companies also, which will be great over a period, right? If you are growing at 18, 20, 25% in terms of your PAT, and if your revenues are growing anywhere between 10 to 15% and more, the more the merrier, I think you should still be there. But in mid cap, small cap, as you rightly said, if I say that entire India INC, mostly EC used to have the old time promoters who probably would not think much about the investors.
Yes.
Right now, there is so much of awareness that if something goes wrong, even their wealth collapses via market cap destruction. So my sense that, as you rightly said, that the onus to create wealth for investors and shareholders is also with the promoter. So that's why the ethical promoters get a premium as well. So mid and small caps, yes. The one thing that I would advise all investors, do your due diligence very well.
Very important.
Don't just forget that while in the frenzy or the fray to make quick buck, right? Because your quick buck, if you earn fast, it will go fast, right? So the color of
Rather
the
it
money
will go faster.
It will go faster. Very well said. Faster, yeah, exactly. So my sense that if somebody comes to the market, give yourself at least 5 years, ideally 10 years. But 5 years is where you need to pay fees to the market also, right?
Yes.
कहीं ना कहीं fees देना पड़ेगा. So you can't go right everywhere. I tell people that 7 times out of 10, if I go right, please give me the right to go wrong 3 times. But listen to me 10 times.
Yeah.
If you just listen to me 3 times, probably you've gone wrong.
Yes.
So that's where I say that you will make mistakes on the way, but don't make costly mistakes.
Yes.
So that's something very important, that do your due diligence, take advice of professionals, I think, which is very, very important.
Yes, right, absolutely. There you've given a disclaimer, and you've also said that why you need to have a
Yes.
right wealth manager to guide you through. But Mr. Mehta, I would love to have this conversation, and I'm sure we will again interact. But thank you so much for joining us today. And to sum up this entire interaction, correct me if I'm wrong, you've given us exactly the right reason why India is the real trade for the next 3 to 5 years at least.
True.
Given the fact that the way how the market cycles work, the behavior works,
Right.
and how the investors have actually matured over the last few
Very
years.
true, very
But, so thank you so much for joining us on
Thank you.
this show.
Was a pleasure. Thank you.
Thank you so much.
Thank you.
Thank you.